All right, today we're going to do something a little different. We're going to dive into a really fascinating case study. It's all about a method called market DNA, and we're going to watch it in action, applied to WTI crude oil. Think of this as a documentary. We're just going to follow one specific market cycle, step by step, and see how this unique geometric system documents market moves as they happen.
So here's our roadmap for this explainer. First, we'll quickly set the stage on the market DNA method. Then we'll jump right into phase 1, which is all about the entry plan. After that, we'll see what happened in phase 2, the mirror contact event. And then we'll follow the action to phase 3 as the price reaches a point called apex N. Finally, we'll do a quick summary of where this cycle stands right now.
Okay, let's get into it. The specific cycle we're focusing on is identified as WTI_2_3. And of course, it's tracking WTI crude oil. Now, it's really important to know everything you're about to see is based on documented events. This isn't looking back with hindsight, it was all recorded in real time.
Now, before we go any further, let's get one thing crystal clear. What we're looking at here is not your typical technical analysis, and it's definitely not fundamental analysis. This is a proprietary geometric system, so my job here is just to narrate what's visible. We're only going to talk about the events and parameters as they're shown in the documentation. No guesswork, no interpretation, just the facts as they were recorded.
So, where does a cycle like this even begin? Well, it all kicks off with phase 1, the entry plan. You can think of this as the master blueprint for the entire operation. It's where all the key parameters, risk levels, and potential outcomes are defined. And this is all done before anything actually happens in the market.
Okay, let's look at the very first entry in the log. The date is December 15th, 2025. On this day, the price came down and hit the primary entry level, labeled M. That happened at a price of $56.56. That one event is what triggered the official start of this documented cycle. You'll also notice there's a second potential entry point, P, C. That was planned for just a bit lower at $54.128.
And this, right here, is where that whole DNA concept really starts to click. This table lays out the complete risk management plan, and it was all defined before the cycle even started. It's all based on a hypothetical $100,000 of capital. And look at this. The maximum allowed drawdown, the most you can risk, is set in stone at 5%, or $5,000. From that single number, everything else is calculated. The average entry, the time frame, and even the precise size for each trade.
The crucial point here is that nothing is left to chance. The position size isn't a guess. It's the output of a precise calculation. In fact, the source documentation states it clearly. Both trade sizes are calculated using the hypothetical capital, the investor's maximum allowed drawdown, the third triangle domain percentage, the risk coefficient, and the contract size. So in other words, the risk management dictates the position size from the very beginning.
But it's not just about entry and risk. The initial plan also laid out a potential roadmap for the price. 3 key targets were identified right from the start. Target 1 was the mirror line, Target 2 was a point called apex N, and Target 3 was the top of that geometric shape called the trapezoid. The plan even calculated a potential return of 4.54% for one of the possible scenarios.
Okay, so the plan was in place and the entry was triggered. The cycle was officially live. So let's see what the documentation recorded next, as the market moved into what's called phase 2.
And here it is, the first key event after the entry. This happened just 8 days later, on December 23rd. The documentation shows the price moving up and making direct contact with that predefined delayed mirror line. That touch occurred at a price of $58.14.
Now, after making contact with that mirror line, the cycle kept progressing. The next milestone that was documented was the price reaching another key point in the geometric structure, and this event marks the beginning of phase 3.
All right, let's fast forward to January 9th, 2026. As you can see on the chart, the price reached the apex N level at a price of $59.65. Now, it's really important to remember, this wasn't a random event. This exact level was designated as a safe exit target way back in that initial plan.
Okay, so we've seen the plan, we've watched the key events unfold. Let's put all the pieces together now and just summarize the progression of this cycle so far. So, the progression has followed the documented path very closely. First, the primary entry at M was triggered. That secondary entry, PC, was never reached. From there, the price made contact with the delayed mirror line. And then, most recently, it has reached the apex N safe exit target. The cycle has methodically moved through each documented phase.
And that brings us right up to the present moment. With Phase 3 now complete, the documentation simply continues to observe. So the key question now is, will the price continue to follow this geometric path and progress to the final phase, Phase 4? This is where the observation continues.
And finally, a crucial reminder. This presentation is for informational and documentation purposes only. It is absolutely not financial advice. The source material strictly prohibits using leverage above 10. And it says you should not invest essential personal funds. Risk management must always follow an individual's own specific instructions.
And that concludes our observation of the market DNA method as applied to the WTI crude oil cycle, WTI_2_3. If you want to see more of this public documentation, you can find the source at marketdnaedge.com. Thanks for watching.